Gold is poised for a significant comeback, potentially marking its most successful week in the last month. But what's driving this resurgence in the precious metals allure? The answer lies in a perfect storm of economic uncertainty, fueled by a massive data vacuum created by the U.S. government's recent extended shutdown. This situation is creating waves of anxiety among investors, and they're turning to gold as a safe haven. As of late November 2025, gold prices are hovering around a remarkable $4,190 per ounce. This puts it on track for a weekly gain of approximately 5%, effectively erasing the losses experienced in the preceding trading session. This dramatic swing highlights just how sensitive the gold market is to global economic shifts. So, why is this missing data such a big deal? Well, economic data provides crucial insights into the health of the U.S. economy. Without it, investors are essentially flying blind, making it difficult to assess the true state of affairs and plan their investment strategies accordingly. Traditionally, gold thrives in environments where uncertainty reigns supreme. Think of it as insurance against economic instability. When traditional investments like stocks appear risky, investors flock to the perceived safety of gold, driving up its price. But here's where it gets controversial. Some argue that this reliance on gold is outdated, suggesting that modern financial instruments offer better protection against economic downturns. What do you think? Is gold still a relevant safe haven in today's complex financial landscape? Another key factor influencing gold's performance is the expectations surrounding U.S. interest rates. Lower interest rates typically act as a tailwind for gold, as the metal doesn't generate any income itself. So, when interest rates are low, the opportunity cost of holding gold, instead of an interest-bearing asset, decreases, making it a more attractive investment. And this is the part most people miss. While expectations of further U.S. rate cuts initially supported gold's rise, that support has waned somewhat throughout the week. Several Federal Reserve officials have expressed reservations about aggressively cutting borrowing costs, signaling a more cautious approach to monetary policy. This hesitancy from the Fed has slightly dampened the enthusiasm for gold, as the prospect of higher interest rates could diminish its appeal. However, the underlying uncertainty caused by the data gap continues to provide a strong foundation for gold prices. The question now is, will the Fed's cautious stance ultimately outweigh the safe haven demand for gold? It's a tug-of-war between competing forces, and the outcome remains to be seen. What's your take on this? Do you believe the Fed will eventually succumb to pressure and cut rates, further boosting gold's price? Or will the data vacuum eventually be filled, easing concerns and sending investors back to riskier assets? Share your thoughts in the comments below.